All right, everybody, welcome. Gianni DePoce is here with you today. We're going to be doing a special session together with the Chicago Board of Options Exchange, unlocking opportunities with Bitcoin ETF Index Options. And we have a very special guest from the exchange who I am looking forward to discussing the Bitcoin ETFs with, Robert Hocking. Robert, are you with us right now?
I am here. Can you hear me all right, Jenny?
I can. How's it going?
Good. Good. Thanks for having me today. Excited to be here. And please, no formalities. Please, Rob.
Rob, sounds
Yeah.
good. All right. Well, we have a lot to talk about. So you have some material that you want to share with the audience. Let's go ahead and get into it, and I'll let you drive, and I'll throw in some comments. And I got my charts up already, so whenever you want me to, throw those on, let me know.
That's awesome. Yeah, please work in real time. And hi, everyone. Thanks again for having me. So as Gianni mentioned, Rob Hocking, I represent Cboe. Maybe a little background on who Cboe is. We are, a global market operator. We operate markets around the globe, 27 different markets around the globe, several different countries. And, really the big thing that Cboe does is we provide a platform and we provide products. And then we let those like Gianni help you with the strategy and hopefully give you a good user experience when coming to trade those products and either, implement a strategy, help manage risk in your portfolio, so forth. What we're probably best known for is our proprietary product franchise that's led with, I'm sure everyone's familiar with VIX, the volatility index, and then also SPX is the other big one. A lot of that was in the news, and I call it 2024. With how active same-day options were trading, or zero DTE, as everybody likes to call it. Zero DTE options in SPX right now are averaging, call it, around 3.1 million contracts a day, so a lot of activity. But that's not what we're here to talk about today, and hopefully we can get into. Cboe just recently launched a new product, and that is options on a new index that we created centered around Bitcoin. What we did was we created the first ever index option suite. So we took 10 at launch. We took 10 of the leading ETFs that track US Bitcoin, or sorry, not US Bitcoin, but US ETFs that track Bitcoin. And we formulated an index around them so that we have a basket of 10 ETFs that are accurately tracking spot Bitcoin movements. The correlation to that right now is around plus 99% to spot Bitcoin movement. And I don't even, Gianni, you said you had your charts up. What do you see today right now for the movement in spot Bitcoin? What's it on the day?
I have the iShares Bitcoin ETF up on here right now. And let's see, I have your ticker symbol here for that. What is it? CBTX. I can throw that up on there. So let's see. Here it is. Like you said, it's a pretty new product, but it is, pretty much tracking what we're seeing in Bitcoin pretty closely. But just so we have a little bit more price history on this chart, I first and foremost, I'm a trader that likes to trade in the direction of the trend. And, I don't think it takes some high level analysis to come to the conclusion that Bitcoin has been in an uptrend over the past couple of years. But, I always like to point out that just because a market is in a trend doesn't mean that it's going to continue that trend forever. We had that big breakout in fall last year, impressive run up. The price of Bitcoin had almost doubled in a span of about 3 months. And, when you get that type of move, it's very normal and very healthy to see a pause in that trend. And it seems like we're having that play out right now. So, in terms of developing strategies in the space, there's a few different range based strategies that you could take. And if you want me to get into that now, Rob, I can. But if you want to, kind of explain a little more, I can say.
Yeah, no, I think that was a great highlight. And it really, kind of what I was getting at with Gianni is if you were to look at call it the spot Bitcoin movement, and then either look at MBTX, which is the mini index that we created, it's 1/10 the size of CBTX that Gianni referred to. Right now, they're tracking pretty close, just trying to represent that kind of 99% correlation if you were to look at the two in real time. And so what was the reason that we created this index? Really, we see a lot of growth in Bitcoin. Obviously, the regulators have most recently approved the ETF trading. We see that as a complex that will be continuing to evolve in the months and years to come. And so similar to the way the U.S. equities markets started out, where we had single name options, from there we introduced index options. We started to build an ecosystem kind of around the two. We want to do the same. Cboe wants to do the same around Bitcoin. And so with each individual ETF option out there, we saw a good benefit for, one, creating an index. And there's a few reasons why we did it. One, it's slightly more diversified. It's still very much tracking spot Bitcoin, but it's made up of 10 different ETFs. It's not just one that you're getting exposure to. So it offers a little bit of diversification across the different ETFs. But then also, as with, call it index options, where you look at SPX maybe relative to SPY, our index options are much bigger. And so I'll actually jump ahead. And so real quick, I think I covered this, but it's at any given point, the index will be made up of 9 to 13 different ETFs. At launch, we had 10, given that was where the liquidity was in the ETFs that were out there. It's a modified market cap weighted system that judges that the index is the methodology around the index. And like I said, it's tracking, spot Bitcoin movement. But to the reason why the index was really, why we introduced the index was a few different reasons. One, all of the ETFs are American physical delivery. And like when you compare SPX to SPY, this will be a cash delivered product. It is not physically delivered. So at expiration of your options, you will just be delivered cash.
Yeah.
What do we got? Was that a question?
No, I said you would hope, right?
Oh yeah, you would hope. Sorry, I missed that. And then also they're European exercise. So we do not have the ability for early exercise on this. So they exercise on they expire on the expiration date and cash settled. Additionally, we have larger notional on these. And then also, and maybe not relevant for this audience, but another reason why we did this is they're flex eligible. So flex is your ability to kind of define bespoke options that you want to use in a strategy. Where this is very popular is defined outcome funds. Obviously, most people have seen a lot of the increase in the option-driven ETF market, all the defined outcome funds. I actually just this morning saw a report from Rocky Fishman. I cover a lot of his research. And he said throughout 2024, the growth in this option-driven ETF market has been humongous. It now includes over 500 funds and around 170 billion in assets covering that market. So that market wants to move into, option-driven ETF funds that are involved with Bitcoin. So to do that, we want to provide all the tools that they have in the standard, call it S&P equity markets in the Bitcoin space. So that flex trading allows them to design bespoke options, call it 120%, 90% down, different exact strikes that they want to build into a strategy that defines an outcome that they're after. And flex eligible was something we could do with the index that's not currently available in the ETFs. One thing that I mentioned was the larger notional. This also is big for that community. I have another slide just to kind of highlight the differences. So we launched the standard, Gianni referred to it, CBTX. You can see the notional size on that is around $225,000. We offered a mini, 1/10 the size. You can see that, call it around 25,000 notional. And then you can see where IBIT comes in. So right around 5,000. So this is really to build out that ecosystem. Like I said, we're not trying to steal market share. We're trying to really introduce an access point for every investor. So if you have individual retail that's kind of living in the individual ETFs in that IBIT space, now maybe you have some bigger individual retail that have bigger portfolios that want to take advantage of a bigger contract, all the way up to the institutional, which is more that CBTX size that maybe is for your index overwriting funds. One that has just announced, Calamos, who is an investment manager that builds defined outcome ETFs, has just announced that they're going to be building, I think they're going to be launching it. I had this up somewhere on my machine. Hang on one sec. Yeah, the new headline that just came out said Calamos to launch world's first 100% downside protected Bitcoin ETF. Wow. Now, Cboe is not sponsoring it, and I'm not saying it's good, bad, or indifferent. I'm just more highlighting that they're going to be using CBTX options to build that defined outcome ETF. And so it's ETF providers like that that really drove us into this space and wanting to provide kind of these different access points for different people. And so from there, you know, now, Johnny, maybe it's even good, you know, and I can keep throwing in, but getting more into the use cases, like why people are using some of these options, some of the strategies that maybe the audience might be interested in, and how some of that can play between some of these different products.
Well, you know, you raised a good point, Rob, in that, you know, it's crazy to think about. Almost 7 years ago, you had the debut of Bitcoin futures. Okay. And that was really the first way in a more, I should say, like protected environment. And, you know, you have these smaller crypto exchanges where you can, you know, short Bitcoin or whatnot. But, you know, futures are different from options. It's important to understand that. Options, you know, your loss, if you, depending on the strategy you're doing, can be capped compared to futures. It can be even more than you put in. But hedging is so important. If you want any market to really make its way into the mainstream financial universe, there needs to be opportunities to hedging. There needs to be opportunities for protecting the downside, and also amplifying the returns. You know, liquidity is so important. You want these big guys on Wall Street to start playing in this space. There needs to be an actual market for it. Okay, and that's exactly what Cboe is building out here, which is so exciting, I think. And you know, there is more retail participation, even in the option space, more in recent years than ever before, you know, for better or for worse, right? But in terms of strategies, you know, it really doesn't change how we approach the market. You know, I mentioned earlier, I like to trade in the direction of the trend. You're usually going to get more time in terms of markets moving in that direction to the upside. So something to consider with respect to strategy in options, right? Because you're not just betting on price, you're betting on time as well. You know, if you're not at a certain price by a certain time, well, then the trade's not going to work out. So important to trade in the trend, I think. And then in terms of price, you know, you're also going to get, generally speaking, those bigger directional moves in the direction of the trend. But like I said, you pause every once in a while when you are in a trending market, and then the strategies can change. So I'm still going to hold off on that right now, Rob. But that's kind of what I wanted to add, is I think it's so important that you're providing this environment, this ecosystem to bring more liquidity in the space, because it's just going to make it more accessible, you know, to not just the, you know, the small individual trader, but also, you know, the more institutional side. So, you know, and then you start getting more and more participation from the general public, you know, maybe higher net worth individuals that weren't in the space, opportunities to hedge or whatnot. So that's what I like about what's going on right now.
Yeah, you raise a great point. It's that liquidity formation. So prior to joining the exchange, I spent about 20 years as a market maker, liquidity provider. And what becomes so important is multiple products within an ecosystem. You know, as you're maybe getting short on one from a liquidity provider standpoint, you're getting short on one, you got to be able to spread that off across more products and kind of lower your risk to any one exposure. And by bringing more products in here that are each offering slightly different things, slightly different exposures to pull in different users, now you're able to diversify a lot of that risk across more products and across an ecosystem, which only helps that liquidity grow in each of the products collectively. It's kind of like that whole, you know, rising tide raises all ships kind of theory. And that's really what we see, is this is the early days of being able to do that.
You know, you raise another good point there, Rob. It's like, you know, you guys built out the VIX, you built out, you know, the S&P options, all that. I mean, I've been trading now 13, 14 years, and the markets have changed a lot just in my career in this space. But, you know, I think the markets are actually more orderly now than the past. There's more volume, liquidity. Yeah, you get crashes. Yeah, you get big. But when you go to close a transaction, I think the ability to complete that transaction has never been easier or better. And that's really important, especially for, you know, people just getting into the business. They kind of take that for granted, not realizing how it was, you know, two decades ago. It was a lot more difficult to get the orders. Commissions and fees were a lot higher. You know, that contributed to the lower liquidity, I think. So it's really, I like to say, what a time to be alive, because I think that there really is, it's never been more accessible across.
Yeah, it's been fun to watch that evolution take place. it's also been fun to see how, you know, the holding period of a lot of these strategies and positions have changed over time. Obviously, if I focus on SPX, when you introduced options that expire every day of the week, you saw the way people were risk managing their book drastically change. Even back when I had a large portfolio, if I had downside risk through the course of providing liquidity, you know, I was looking at a weekly, even before, you know, before weeklies were introduced, I was looking at monthly options. There was heavy cost involved. Now I can come into different economic announcements or elections, any sort of market event, and buy that downside and own it for a day or two, and it can cover my risk around that event. And now and especially when it comes to cash settled products, which we're high on for that short dated trading. Now when the option settles, goes into cash, you're immediately ready to reposition your book around whatever's next. And that's a good area to highlight in the introduction of these two index-based options. Because they're cash settled, because they're European style, we are working with regulators. And now I have to give the disclaimer, you know, this all has to be approved by the regulators, but we're actively working with them to introduce shorter duration options in these. So hopefully maybe someday all the way down to dailies like we have in SPX in the Bitcoin options, which could be something that's very useful for investors to trade. You know, if that's something that the investing public wants, I always say at the exchange level, like, be vocal with us, be vocal with your brokerage platforms, because that's something we want to deliver the value to the end user. And if that's something that is valuable to you, we need to hear about it. But with the cash settled nature of the index options, it's a similar path to the path we went on with the S&P.
I think it's great, and judging by what I see on social media, Rob, I think there will be a market for those daily crypto options when the time comes.
Well, yeah, when you're looking, I think you're looking at, and I don't have it in front of me, but if I off of memory, you know, S&P has a historical vol, let's call it around 18-20%, and right now, from what I think, Bitcoin is around 56-57% historical volatility. Yeah. So if you can think of those daily moves and being able to position around and being able to hedge different, you know, headlines that come out, you can see a real use case for that.
Well, you know, you just made me think of something else too. I think that building out, you know, these products will actually probably help Bitcoin be accepted more at a societal level, because, you know, people have these arguments, oh, is Bitcoin money? Is it a medium of exchange? All this and all that. Well, guess what? If you have 10% daily changes in the spot price, no one's going to accept that in terms of a medium of exchange, right? So if as the volatility comes down in the long run, thanks to products like these, thanks to hedging, it becomes an actual viable solution for a lot of the problems that people have pointed out, you know, when it comes to the monetary system. So it really is, you know, you have to understand what's happening at the bigger picture at the top level to realize that these developments that are happening kind of underneath the surface, under the radar, not those, you know, sexy headlines in the crypto space. This is what's going to make this an entirely new financial sector that's going to be around for a long time.
Yeah, I couldn't agree more. I see it. And I love the development of these ETF options. I love the idea of how transparent they are. Centralized clearing is a huge piece on this. Like, you're introducing the risk exposure that everybody wants. They want to trade that price action, right? But you're doing it within an account, within a structure, within a framework that everybody is super familiar with from trading single name options or index options and so forth. So the bridge between the two, I think we're at a really exciting kind of inflection point of potentially seeing Bitcoin take off even more so than it has in call it the recent couple of years.
Yeah. Great.
On that front, probably a couple of other things just to highlight. Obviously, we've talked about, and like I said, I'll defer to Gianni on some of the more specific strategies that he's seeing and things to take advantage. But obviously, we see the use of options, and specifically in Bitcoin, you know, transferring across a bunch of different use cases. We've already talked a little bit about hedging. We've talked about, you know, the speculative nature. I mentioned diversification on how the index even can diversify across multiple ETFs, but then also introducing Bitcoin into a portfolio obviously helps with diversifying that portfolio against the equity markets. And then we've talked a lot about it. This is the whole point of that listed market. It's the accessibility. And that's really Cboe's job is, you know, we got to knock down access barriers for all of our products. whether it's Bitcoin index options, whether it's S&P index options, single name equity options. Like, we are constantly working to break down not only access barriers for US clients, but clients abroad. How do we bring and import that interest in trading our products from overseas, whether it's Europe, the APAC region? How do we bring that into the US and into our platform? Last was just a quick kind of example, you know, what the two kind of look like, and the idea of investing in an MBTX December 10, 224 call option versus an IBIT call option. And really, we've highlighted them, but just to kind of drive that home, the big one that I always like to refer to is the cash settlement. This is really a huge differentiator amongst the index options relative to the ETF options. At the end, your position is settling into the cash that you know, plus or minus the cash from where you put the position on to the settlement value, versus getting delivered those shares at the expiration, or sorry, at the strike price. And so, with Bitcoin being more volatile, as we talked about, call it a 56% historical vol relative to a sub 20, that can be a differentiator in some of your guys' investments. And I like to call it out, because if that position rolls into shares, you still have that price exposure in the long or short shares. Whereas at the time of expiration with a cash settled index option, it is into cash, and you are clear of that trade, and you're clear of the underlying movement of the trade. And so, something to be aware of. We think it's a nice differentiator. It's also something that really helps when you're overwriting, which is a very common, you know, strategy that's out there when you're either writing calls or puts over a stock position or over a long or short underlying position. We'll use call overwriting as an example. When that overwrite expires, you're not at risk of having that stock called away. And so sometimes that can create taxable events. I'm not giving tax advice. I'm not a tax accountant, but just more highlighting that when you have, if you're overwriting a call on an equity position and that call finishes in the money, they take your stock as part of that overwrite. You're now selling out stock that maybe you have a taxable event associated with the selling out of that stock. With a cash option, cash settled option, it settles to cash, but your underlying portfolio is safe. It's not touched. So you don't have potentially that taxable event. So there's a lot of nuances between cash settled and physical that I think are important. I encourage all of your viewers, you know, to dig into that, make sure you fully understand it. Talk to your advisor, talk to your brokers to understand the nuances. But it's something that, depending on your strategy, can be something you can benefit from.
That's all such important information. So great.
And then from there, I'm more, you know, just kind of wanted to jump in with you, like how, you know, what are you looking at right now with regards to Bitcoin? We can even take this down. What sort of strategies are you looking at, and are there any, per what you're looking at, that maybe, you know, along the lines of cash settlement, maybe this would be something that could play in well? Anything along those lines?
Yeah, well, you know, the biggest thing is I do own some of these Bitcoin ETFs, so I'm bullish. It's my general bias in this direction. But you know, one of the things with these options is that, you know, you mentioned you know, those calls. You know, when you get into these range bound markets, if you do get a correction, okay, if you get a correction, even just selling, you know, writing calls, getting a little bit of income, that adds another element of I guess trading that didn't really exist before. You can get income from just holding these funds. You know, some of the Bitcoin ETFs do have some yield. You know, that's the thing to keep in mind, is that a lot of these ETFs do operate a little bit differently. But that's what's great about, you know, the CBTX. What was that ticker symbol again? CBTX. Yeah, CBTX.
Right.
You know, it bunches them all together and gives you that nice you know, tracking of the spot price. But you know, the big thing that I would do is this is a long-term bull trend, right? And so even if you were to break this, what's called technical support here, you know, right now Bitcoin forming this an IBIT like in this $48-50 area, if you start breaking that, instead of selling your position, like, you know, Rob had mentioned, creating a tax, you can hedge by writing calls, selling calls, getting a little bit of income, offsetting some of your losses. Now, if you just wanted to trade the range bound price action, you've been in this range below technical resistance. Obviously, that was an all-time high that we had in December about a month ago. And we've been going sideways from there. There's all sorts of strategies. I'm not going to get into all the details. You can do, iron condors, straddles, strangles. If you have a more directional bias, spreads that you can take on. But for today, I would just want to focus on the technical picture. The trend is still up. There is a lot of excitement in the space. What I'm seeing here, just at a purely technical level, still looks pretty solid to me. The trend is up. But I do want to bring attention to, what happened last year. And we've seen this play out time and time again in pretty much any market. That's the beauty of technical analysis. And I think if you are going to trade, if you are going to be a speculator, you do need to invest some time in learning the charts. When you get these big moves, like, 100% move over the span of 3 months, that's big. You don't get moves like that all the time. But look at how long Bitcoin traded in that range last year. You're talking about, an IBIT, a $10 range going for, what was that, like 8 months? And that's what led to, ultimately 100% move from that low in August to that high in December. Now, if we're going to be going for, a few more weeks or another couple months, I think it's important to have realistic expectations about what the return potential could be. So what I'm trying to say is that if the duration or the length of this range bound motion is not going to be as long as, what we saw last year, then by extension, we would look for less upside. That doesn't mean that there won't be upside, but having the right level of expectations helps you plan trades accordingly. So if you're making bets that Bitcoin's going to double in value, well, that's probably not based in reality, based on how the price action that we've seen play out in these patterns before shows. So, I know a lot of the options guys don't like buying, straight calls. The probability of success on those isn't as high if you look at the data. And that's why I said, look at spreads, look at ways to kind of hedge those types of movements, but also having realistic expectations to the upside. So, if you start to break out here above this range, we'd be looking for a close above this upper trend line and close above these candlesticks here from mid December. You start breaking those, you might get $8 to $10 move in the the IBIT ETF, and that translates into a pretty nice move. But it's not going to be the same magnitude or the same duration. So again, when it comes to options, it's not just price, it's time and price, and you have the decay on the value of those premiums if you're holding those positions. So all things to keep in mind when you want to take positions on the options in these ETFs.
Yeah, that's super helpful. I think it's kind of funny when you were talking about that. One thing that popped into mind on kind of the sizing difference too, and this isn't directly related to your strategy. Once again, I get in trouble if I start talking too much strategy as an exchange person. Sure. But is another reason we created some of these contracts were position limits. And so position limits are fairly standard across a lot of these. I think for a regular listed option, it's around 24,000 on that line is considered a position limit. But with the larger notional size, we wanted to increase bigger, effectively notional per those position limits for a lot of these ETF funds. When you think about the bigger size, if you start to create an overwriting fund that builds a lot of AUM, you need to build more and bigger position limits. Not to mention Flex, as I mentioned, has 4x on the position limits. So once again, just more giving you an idea, not that necessarily it's useful to your personal trading, but we're trying to build that institutional market that will drive a lot of flow into this space that will hopefully help the liquidity, all around. And I saw a question come in that said, is CBTX set up like SPX to have the 60-40 tax split? So once again, not a tax accountant, can't give tax advice, got to give all those disclaimers. But unfortunately, this is a narrow-based index. This is not a broad-based index like the S&P 500. It follows narrow-based listing rules, hence the 10 components. It's considered narrow-based. So I don't believe, and please check with your brokers, check with your investment advisors, I don't believe the same 60/40 is applied to the narrow-based indices. So it's not like S&P. So I wanted to throw that out there, answer that question. I guess any other questions out there? I love feeding actually off the audience stuff. So like I mentioned, as the exchange, our goal is to get product awareness out there. What we're trying to do, what we're trying to build, how we're trying to build it, so that you all can access that market in a way that's beneficial to you. So that's really, from my standpoint, this is something we're very dedicated to. We're going to continue to build this out. As Gianni was talking about, as options liquidity builds out in these, you can see us looking to develop additional indices to help, like even Bitcoin VIX type indices, to help build visibility into this space, help build awareness into the different movements that you're seeing, and so forth and so on, kind of building out and replicating what we have in the equity space into an asset class such as this.
I actually have a question, Robin. I don't know if you're at liberty to talk about it, though.
Yeah, please, hit me.
Is it too early to start talking about Ethereum options?
It is not. It's something we're looking into. We like the idea of obviously how we did that. The problem is that market isn't as developed at this point.
Sure.
And so we have a lot of kind of standards that we need to adhere to from a regulatory standpoint to be able to develop a lot of these products. And right now, I believe out of the Ethereum ETFs, there's probably only about 4 that qualify for us to build an index around it. So we need to get to that narrow-based index listing rules. You need to get to 10. Okay. That's why we waited until, and that's why we launched with the 10 kind of biggest, most liquid for the Bitcoin one. And so it's on our radar screen. It's a market that we want to continue to build out. We anticipate this probably, if I had to give a poor but somewhat analogous example, it's kind of like, the large cap world building out and then the small cap world building out. There's going to be a little bit of a delay, but I think in time you'll see those two markets grow and evolve. And we're excited to kind of take our product building expertise into the Ethereum side when it probably gets a little bit more developed at this point.
Yeah, it's close. It's close for sure. But that's good to know that 10 number. I actually didn't know that that was a regulatory requirement for you guys. So that's what I need to keep an eye out for, those as these ETFs continue to come out. Once we get to the number 10, we can be on the lookout for it.
Exactly.
Yeah.
And we're excited, like I mentioned before, like the Calamus announcement. There's others as well. Like as we start to see these investment managers starting to build defined outcome funds that track Bitcoin, that even track ETH maybe down the road, those things now, like if you don't feel confident trading the options yourself, but you want the economics of an overwriting strategy, or you want, the price action of something where it has embedded options in it, this too expands the market, in my opinion, very, very well. So now you can buy kind of a Delta One long only instrument, get the options exposure kind of overlaid and get the economic impact of the options, but not have to be doing it yourself, not have to be trading the individual strikes. And to me, that's kind of another first step in the build out of a lot of these ecosystems, is get people understanding the payouts associated with options in a portfolio. That's a huge education piece right now. It's funny, I ask so many friends, family, whomever I run into, I coach 5 days a week basketball for different teams, and I ask parents of the kids that I coach, and I'm just like, do you guys trade options? Do you understand options? Like when I say options, how do you respond? And they're like, oh no, man, too risky, don't understand them, just not comfortable. That's what the exchange is trying to overcome. Options were created to reduce volatility in your portfolio, right? Help define your outcome. They weren't necessarily created to add volatility to your portfolio. So, right. We have a huge education job as an exchange to help further that understanding of what options can do for you, how they can benefit your portfolio. And I think these defined outcome funds are a great first step, because you can buy that already wrapped together. You have an advisor that's putting it all into, one instrument that you can buy. And so from there, you can see that expansion, you can see that growth. And I think options in general, I won't say it's in the first inning of the ball game, but we're in the early innings of a ball game, in my opinion. Even though these products, some of them have been around, 30, 40. I mean, Cboe just went through its 50th anniversary, been around 50 years. I still don't think the saturation point is anywhere near where we can grow it and where it can be, really useful products for people as they manage their portfolios.
All very good. And that's why, as a matter of fact, I mentioned, you probably don't want to be buying straight calls if you're making a bullish bet on Bitcoin. I was hedging my own statement there, Rob.
Right. Exactly. It's just getting that level of comfort with understanding how the payouts and it's another thing. Our Options Institute has worked on all sorts of learning portals and everything where people can come in and even go through paper trades. And paper trades are just a way, throwing on a trade, seeing how it reacts without actually having capital at risk. I think all of those tools are great. I wish a lot of them would have been available when I entered the market, call it 25 years ago. Would have helped me understand what my bosses were yelling at me for a little quicker. And so, I think that education piece is so important and something the exchange is incredibly invested in to help build this kind of ecosystem.
Very good. Well, Rob, in terms of analyzing Bitcoin and, the ETFs, I don't really have much else to comment on right now, aside from, we still are range bound. We had what appears to be, what could be a low of significance complete on Monday. You see when you take out this low here, can be, a sign of seller exhaustion. And right now the trend is up. And just to define that real quick, I don't think I actually defined that. When you're looking at trends, okay, you have to look at how the low or high that is forming now compares to the previous high or low. If you're making higher highs and higher lows, the trend is up. If you're making lower highs, the trend is down. But, the beauty about options compared to just straight owning of an asset is that you have strategies that can help you make money when you see pauses in the trend or are range bound. There's not many other securities that allow you to do that, and what I've seen, because I started off in the equity world. A lot of traders, obviously there's overlap with ETFs, but a lot of traders end up getting chopped up in range bound markets. But if you understand and have a way to identify that you are range bound, there are option strategies that can allow you to collect income and still make money in those types of environments. So definitely something to do some more digging on if it's something that interests you.
Yeah, that's great insight. And from the exchange standpoint, once again, thanks for having me on. For us, it's product awareness. And so even Jenny, if you can throw up there, we have one of the QR codes. If you guys want more information, facts on this, we have a whole learning resource hub on our website with all the different product specs, so forth, that you can familiarize yourself with the contract, bookmark it in your trading systems, keep an eye on it. As we see volumes in IBIT grow, I reference IBIT just because I think that's the most liquid one at current. I think right around ADV is probably around 400,000, I think, contracts a day right now, and growing. Open interest has been growing. Our two contracts are definitely in their infancy. We're working on growing liquidity as we hear more and more interest, and as we kind of build that buzz about the whole ecosystem as a whole. I think you'll see it continue to grow. And so, bookmark it, keep an eye on it. If you guys have questions about it, please reach out to Cboe, and we'd love to talk you through it, talk to your platforms about it. We can also educate through the various platforms that you guys trade on. And thanks for having me on today and being able to talk through the product.
Oh, thank you, Rob. I think we have one more question in the chat.
Oh.
Let's get that up. What is the expense ratio for CBTX?
Ooh, I actually don't know that off the top of my head.
Let me see if I can find it real quick.
Because it would be a function of all the different ETFs combined. That's a great question. It's always the last one that stumps you on one of these.
Yeah, I'm actually not seeing it on a quick Google search there.
Because it's an index, like we don't have an expense ratio, because the index itself isn't tradable. You're just like, there's no underlying that you're trading like an ETF. the underlying of this would be each individual ETF, and however you would want to construct a hedge to the options would be a function of, you know, however you're trading that underlying basket of individual individual ETFs. The CME future is also a very close hedge to this. And then, of course, we have margin futures on our platform, Bitcoin margin futures, that are also a decent underlying and all very, very highly correlated to the options themselves. But because these are based on an index similar to SPX, and that index itself is not tradable, I don't think the expense ratio really applies.
I agree with that. Yeah, indexes don't have expense ratios, but
right.
So, all right, Rob. Well, thanks so much. That was great, and it's good to know that we're in the, you know, maybe seeing Ethereum in the pipeline, and even to know some of the inside baseball in terms of what it takes to build these products out. So, thank you so much for joining us, and everyone, thank you so much for tuning in with us here today at Benzinga, as Rob Hocking and I took you through the opportunities with Bitcoin ETF options and how we're building out that ecosystem to make it more accessible to traders and investors across all different sizes. So that's all for now. Thanks again, Rob.
Thank you.